Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for August 5th. Well, the pound's still struggling this morning after yesterday's surprise moves by the Bank of England. I did a separate video yesterday about the Bank of England, so I'll just say today that I think the moves will continue to pressure the pound over the coming months. Now, while the pound hasn't, again, hit the lows that it did immediately after the Brexit vote, it hasn't recovered much from yesterday's lows either. That suggests to me that people are still bearish sterling. The dollar is opening a little changed overall in Europe today. It's weaker against the commodity currencies as oil rebounded, but it's stronger against the euro and, of course, against the pound too. There seems to be a bit of risk premium building to protect against any disappointment in today's monthly U.S. non-farm payrolls. After 2 months of extreme volatility in the NFP figure, the market is expecting a more normal increase of 180,000. That would be more or less in line with the six-month average, which is 172,000. It would also be in line with yesterday's ADP report. Now, the ADP report has been much more stable on a month-to-month basis recently than the NFP has. The unemployment rate's expected to drop one notch, but average hourly earnings and the average weekly work week aren't expected to change that much. Looking at the past relationship between the NFP figure and other measures of the employment market, the ISM employment indices, the ADP report, and the weekly jobless claims, I also estimate that the figure will be around 181,000. But this estimate is by no means certain, as you can see from the graph. Could a figure as expected change the market's thinking about the September FOMC meeting? Currently, the market only puts an 18% probability on a rate hike in September. Personally, I think the odds of an increase in September are higher than that, and I think they'll be even higher if this number comes in as expected. First off, it appears that the committee may think we are already at full employment. The FOMC statement dropped the phrase underutilization of labor resources and then replaced it with some increase in labor utilization. That suggests they think we could already be below the natural rate of unemployment. Chicago Fed President Charles Evans Wednesday estimated that rate to be 4.75%, 4 3/4, versus 4.8 expected for today's unemployment figure. Meanwhile, Dallas Fed President Robert Kaplan said payrolls had to grow between 80 to 125,000 a month just to keep pace with the growth of the labor force, and that he wanted to see a healthy margin above that. I'd say 180,000 meets that qualification of a healthy margin. In short, I think if the payroll figure does come in as expected, it's likely to make a rate hike in September seem more likely and therefore boost the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.